ready to call me.
Hello, good morning. Can you hear me? Can everyone hear me? Please signal to me if you can hear me. Can everybody hear
Hey,
me?
good morning, Tony. How are you?
Okay, good morning, everyone. You are welcome to the 20th edition of Alpha Morgan's Quarterly Wealth and Economic Review with Bismarck Rewane. My name is Doyin Anyuhe. I'm an executive director with Alpha Morgan Bank, and I'm glad to be your moderator today. As usual, we have on our panel today, we have our Group Managing Director, Ade Buraimo. We have Mr. Bismarck Rewane, our able speaker, and then we have George Imading. And as we always do, we'll get right into the business of today. We've had some positives. I think the last time we met was February 25, when we had the first session for this year. And things seem to have up and up. We've seen our Naira growing stronger and stronger. We've seen the local economy improving. We saw MPC at the MPC meeting yesterday, the CBN retained all their monetary policy parameters, maintaining a cautious policy stance. And things seem to be going well in Nigeria. But then we're here to review both local and global economy and what it means for you as an investor. As I said, we met on the 25th of February, and then 3 days later, Iran war starts. And what does that mean for us today? Well, as always, we have our very able speaker, Mr. Bismarck Rewane, who is the Managing Director and Chief Executive of Financial Derivatives Company Limited, who will help us, piece together all these pieces and how we can navigate them for better investment decisions. And so I'm very, very pleased to welcome you, sir, Mr. Bismarck. You're welcome. Thank
Good morning.
you
Thank
as
you.
always. Yes, thank you as always for being a very strong voice to help us connect the dots and basically just help us chat a way forward. You're welcome, sir.
Good morning. Thank you for having me.
We're going to short so that, yes, as much time, and then Ade will come up after that. So over to you, sir. Oh, by the way, please, let me encourage our viewers, our participants, please type your questions into the Q&A box. Type them in as early as possible so that Bismarck can take as many of those questions as possible before we close. Thank you. Over to you, sir.
Thank you. Let me share my slides so that everybody can see it. Slideshow. Okay, good morning, ladies and gentlemen, distinguished ladies and gentlemen. I'm going to start with some context. And the context is that we had the last session 4 days before the Iran-US war, Israel war, and everything has been upside down. But ever since then, we've seen what we can call market turbulence or market volatility across things. But to put some more context, this morning, I think the SoftBank was able to consummate a particular investment, which has sent both the Korean and the Taiwan markets out of the roof. In the Japan markets, everything has moved significantly higher because some of the uncertainty has reduced. A couple of ships have gone through the Strait of Hormuz, which is a choke point. And you know that Mr. Trump met with the Chinese leader, And also the Russian leader met with the Chinese. So basically, we're moving gradually towards some global stability. NVIDIA, which is being one of the most valuable companies in the world, released their results, which means that there's an upside opportunity for tech stocks and for those that are dependent on AI and to a large extent on microchips. So we've seen the Korean market actually went up by as much as 5 to 8% this morning. It will stabilize later on, but that's a precursor for what is going to happen when the European markets stabilize. Also, everybody's portfolio are sensitive to two things: one, earnings, and two, interest rates. So it's important to put the context of interest rates. We know that Kevin Walsh has been confirmed as, but that's not the issue. The key issue is that what interest rate environment are we going into, and what will happen, and what will happen to your portfolio, your 401k plans, your investments in various instruments, and whether they are going to be stable or whether they are going to be growing. So yesterday, we had the MPC meeting. We also had the Ghanaian MPC meeting as well. So Ghanaians held, we held, and I think Angola had earlier on, but we'll come back to that. But the most important thing is that if you are investing in the Nigerian stock market, based on whatever it is, based on speculation, based on a irrational exuberance, or based on earnings, all of them seem to point to the fact that you could be getting as much as almost 52%. The figure changes every minute from the year to date, but since the war in Iran, you've seen some ups and ups, more or less. Now, what is driving this? And is a correction inevitable? So what happened yesterday, initial reactions after the central bank announcement was very simple. One was that we saw the stock market actually lose 1.02%, which is strange, because if they held and the Naira stayed stable, then we should see the stock market actually increase. So our own understanding, it's yet to be proven, is that a lot of FPIs that were going to come in, or FPIs that are in, are rotating their portfolios in favor of 10-year US 10-year bonds, which are giving a yield of almost 5.1%. That's relatively high. Those yields were at about 3.8% about a month ago. So that's a significant. And when you compare that to the rate of inflation in the US, it means that rational investors are making some very interesting decisions. So we'll come back to that, but I think some of the other things that we want to understand is that what are the major events that are going to affect your portfolio, and what should you be doing in terms of how to make money in the next 2 months. The central bank governor did say that the next meeting is in July. Last time we had a 3-month hiatus. Now it's clear, and we are going to discuss that in some more detail. We've seen the UK go through some political instability, but strangely enough, two things happened in the UK. One was that inflation actually declined, slowed, and unemployment growth actually increased. So in spite of the political misunderstanding between the Labour Party, the Tory Party, the Reform Party, and the Green Party, it shows that the UK economy is resilient. We'll also come to the other areas. The ECB, the Bank of England, and the Federal Reserve kept their rates unchanged. And what they did is not important, it's what they are likely to do. The guidance shows that, as a matter of fact, there's a fear, and palpable fear for that matter, that the Federal Reserve will have no choice but to increase rates. So from an expectation that rates will reduce, right, and that equities will increase, bond prices will increase, we are going to a situation where we might see an increase in rates. But the question you are going to be asking me about, Kevin Walsh is, according to Elizabeth Warren, is a Donald Trump puppet, right? So why would he do anything? So unfortunately, the way the Federal Reserve works is the chairman has only one vote of the 10 members. And there are other members who are all independent. There's only one guy who voted for an increase, for a reduction last time when others held. And that guy is, I think, Kevin Bassett or somebody who has now left. Now, what we see is that being the case, I don't think that in the meeting of June 15 or 16, that there'll be an increase, but there'll be a lot of pressure depending on what data comes out. Don't forget that Mr. Trump has already changed the head of the Bureau of Statistics in the US. He fired the previous one that the data that was coming out was not favorable to him. But there's only so much you can manipulate data. You have to, the data will speak for itself. So UK inflation slowed, which is strange, from 3.3 to 2.8%. Nigerian capital market has gone all the way from T plus 2. I think T plus 1 is in June 1st, I think. But we also noticed that they extended the trading hours from 9 to 4 p.m. instead of now. So whatever since then, we've seen an increase in turnover, average daily turnover. Well, if you look at it from a range basis, the increase in turnover is not does not correspond with the increase in the number of hours. So if, for example, there was a 30% increase in the number of hours on trade, and you had a 30% increase in turnover, then you can say there's a strong correlation between the number of hours traded and the turnover. But this just happens to mean that there's a point in time between 3 or 2 and 4, and we noticed that yesterday, when the markets are open in Europe, the markets are open in the United Kingdom, the markets are open in the US, and the markets are open in Nigeria. So it gives you our markets are more integrated with the rest of the world. So, and we saw normally when the central bank makes its announcement at 2 o'clock, the markets close at 2:30. This is the first time we've had it, and therefore we saw market reaction was strange because the market was open and there was two more hours of trading after that. S&P has upgraded Nigeria's credit rating from B- to B, but I want you to take this in the context. Yes, the outlook has been upgraded, the rating has been upgraded, but we are 4 points below junk. That is, you have investment grade and you have junk grade. What a rating tells you is the probability that this country will default in its bond payments on obligations. What S&P is saying is that Nigeria is unlikely to default on its bond obligations. That is not the same thing to say that Nigeria has become investment grade, in which case anybody who is buying a Nigerian bond or buying a Nigerian asset does not have to make a provision in the books. So if you're an asset manager and you bought a Nigerian bond, but also if you bought Nigerian assets and it's considered junk, you will have to make a provision in terms of your capital. So I just wanted to open the discussion with this, because we're going to go through. So asset class returns, what has happened ever since then, or what is more important, what is going to happen. And so, like I said at the beginning, earnings, 1, 2, interest rates, 3, inflation, and 4, is the market, or are the markets overvalued or undervalued? Are they oversold or overbought? But don't forget, at the beginning of the year, we had what they call the Big Beautiful Bill. We had the Liberation Day about tariffs, and now we have the crisis. This morning, as I listened to the review, there's an attempt to have some altercation with Cuba, right? And so what do all of these things mean? One thing we have to watch is the price of oil, because the price of oil increases, then the dollar usually falls. And of course, technically speaking, the price of gold should increase, but we've seen very contrarian movements. So what do we have? Since from February to May, in spite of the volatility. The Dow Jones, which is a wider, has increased by 0.81%, which is quite interesting. The S&P 500, which is a wider, has actually gained 6.9%, and the tech-heavy NASDAQ has actually gained 14%. So I think that's something that, if you invested, and look at this compared to the annual rate of inflation, I think it's very important to know that. So if the US rate of inflation is 3.8 and worst case scenario goes to 4, and I don't think it will get there, and you are getting, on the S&P, you're getting 6.91, you're doing very well, all right? But it tells you something. If $19 billion of your reserves, because foreign portfolio investors brought their money in here, and interest rates are increasing in the US, then it is likely that we are going to have a situation where people will then begin to rotate their portfolios and there can be a reversal of flows. So one, Nigeria will have to use interest rates, use strong earnings, and use policy consistency to keep, not only to attract investment flows, but to protect the flows from here from going out. Don't forget that your currency has appreciated at this time. What next? The global stocks that are what we call the Magnificent Seven. Well, we need to go beyond that. Apple is actually at 293 right now. So in January it was 270, February 264, 19th of May it is 293. So these numbers, you will have to ignore that. Microsoft is right. Microsoft, as you can see it, is let's see. Actually, Apple is 302, right? So now, so NVIDIA announced the results and it's up. So most of these stocks have actually done much better. At one point in time, they were low, and that was about maybe a week or 7 days ago. So this needs to be updated and clearly defined. So what has happened to gold? Gold has lost 13%, but don't forget, gold was already on a tear. Gold had gone too far. The Nigerian Stock Exchange is 30%, but I think it's more than that. And S&P, like I said, 6.9. The FTSE is down, but you can understand that because FTSE, if the British inflation and British growth is increasing, the likelihood that the British will actually reduce rates is much lower. And then, of course, Britain has its own political problems. Some of it political, some of it racial, some of it part of the Brexit discussion. Cryptocurrencies have increased by 7%, but don't forget, cryptos were about maybe 15, 17,000 about a year ago, and now went all the way to 80,000 and so on. So again, I leave cryptos out of the picture. So factors driving the Nigerian Stock Exchange, PEMCON has increased its PFA domestic equity exposure cap to 35%, so pension funds can invest. Also, if you listen properly, the Pension Commission has allowed PFAs to invest in IPOs, the Dangote IPO. That is the first time. So if the Dangote IPO is going to be, so what is the implication of that? If the pension funds can now increase the equity exposure and they can participate, normally no pension fund is allowed to participate in an IPO because it's too risky, we don't know. An IPO means, and the company is introduction by listing. The company, normally, for you to list, you should have declared dividends for 3 years. You should have been in existence for 5 years. So this is, all right? So that's very, very important. And what will the pension funds do? The pension funds may, and I don't know what they may sell some stocks to get liquidity to buy into the Dangote refinery. So Dangote refinery seems to be the only game in town right now. Retail participation in the NGX grew from 10 to 35%, and Brent has traded above $100 for about 90 days or more than that, about almost 10 to 12 weeks. So one, oil revenues are increasing for countries that are insulated like Nigeria. The bank recapitalization has been successful. There's going to be we are going to T+1, and pension funds are allowed to participate in the IPOs. So all fund managers and asset managers are looking at their portfolios and deciding whether to go with the flow, or you might decide to have a contrarian view because whatever goes up is likely to reverse at a point in time. So, but this is the way we look at it. So Nigeria's GDP growth, we understand, may come in, and that is for Q1, coming about slightly lower than what it was, maybe about 3.4, 3.5%. But that's typical for the first quarter, and it's not going to affect the stock market as such. But when you listen to the central bank governor talking yesterday, he talked about what has been driving growth, and one of them is petroleum sector, and mainly talked about oil refining. So we'll take on. So since they've gone to 4, you can see it on the side here. So Lagos is open, London is open, New York is open, and for a point at between 3 and 4, Europe is also open. So that is Frankfurt, London, New York, and Lagos. So traders have opportunity to move. But what would have happened that Southeast Asian markets would have closed? Okay. So basically, it doesn't mean that because the markets extended trading period that your stock price will increase. It only means that your market is more efficient. And if people are going to dump stocks, they can dump them very quickly into other markets. Okay, here we are. Let me say for sake of argument, there's a company called X in Nigeria. And okay, sell it quickly and move the money. I want to buy before Frankfurt closes. I also want to move my money to cash so I can buy into Singapore when they open, because they are so many hours ahead of us. So where are you to invest? Investors should be right. What we want to do, we are looking at some stocks that are worth looking at. Interesting developments. I think that the federal government or NCC made a comment that they're going to be penalizing telcos for drop calls and comments. Well, that's not the issue, but you can see that for Q1 numbers for MTN, we saw total revenue reach a record up by 41% in one quarter. So even if you annualize it and call it 41% growth in revenue against the GDP growth of 4% of the economy last year, and maybe 3.7% is a stellar performance. Profit before tax, due to some extraordinary items, went up by 169% to 546 billion. The stock itself has moved all the way sharply. It's about 850, I've lost count of it. But don't forget, 2 years ago, we were talking about 184. So even if it's at 900, you've made 5 times or 4 times your money. 400% return is quite, can be called, it's not a modest return, it's a decent return, right? EBITDA has increased by 68%, but is it sustainable? Well, earnings per share went up by 166% to 16.95. And of course, they declared a dividend. But also, when we look at what's happening to the group, the MTN group, they had some difficulty there. At some years ago, they bought a telephone company in Iran. Now they were accused of going against it was illegal for companies to buy, because Iran was banned from, because of their, what do you call it, the nuclear things and all of that. So MTN had to take a haircut in selling those assets. Well, maybe now they shouldn't have sold it anyway. So, but that's an interesting result that I saw there. USC, which is not such a big company anymore, revenue is 190. So if you look at stock at the top, revenue of MTN is 1.5 trillion. And while the gross revenue of USC, which I went up by 241%, is 191 billion. So it's like a drop in the ocean, but it doesn't matter. It's not the size of the company, but the performance. USC was uh, USC was in the toilet for such a long time, but now it's coming back. So uh, the packaged food business is doing well. They sold their USC property. Profit after tax is 13 billion. They have a new board, and I think they're also in the business of, they have Swan Water, they have a couple of things, but scale is not their big thing. Most of the things they were doing in the past have been taken over by a lot of Indian and Asian companies in Nigeria. Okomu oil is interesting. Revenue 58 billion compared to 58.1, that just up marginally. Gross profit at 47 billion. Profit before tax 34 billion. If you went back and looked at what Okomu oil was doing about 3-4 years ago, it was a tiny company, but now it has become a major, and earning per share of 24 naira. But I would say, wait a minute. Yesterday, Indonesia announced something. Indonesia banned the export, and that's the largest palm oil producer in the world, right? And if Indonesia bans the export of palm oil, the global price of palm oil will increase, and the local farmers in Nigeria will be temptation to smuggle palm oil out of Nigeria will make sure that the price of palm oil increases. If the price of palm nuts, it means that the cost of the input cost for Okomu and Presco will actually increase. So their margins could be squeezed. But again, they've done well and they continue to do well. But the answer to Okomu and Presco is to increase the yield on the plantations, right? The global price is not as important as the yield and return on the plantations. And the palm commodity goes from palm kernel to palm itself, palm nuts, to the branches, to have, it's a fully integrated thing. So another interesting thing was that revenue of the Zenith Bank crossed the 1 trillion, going to them, the first bank to have earned 1 trillion naira in a quarter. Profit before tax, 360 billion, and profit after tax is 314 billion. Looks like an interesting thing. So they have an entrenched institutionalized management scheme, and again, don't forget the banks. Many banks were not allowed to declare dividends, and therefore, why? Because their non-performing loans exceeded the allowable limit. But we think that something interesting will happen in the banking sector, that is capitalization achieved, but then the power forbearance, which will bring money back to those banks who have made their capitalization, and then their earnings will actually spike, because if you are provided for a loan and written it off, and if that loan is repaid or somebody comes in and the federal government is paying forbearance, all of that comes as profit. So you're going to have a surge in the profitability of the banks that were exposed to the energy sector. So what could go wrong? We're saying this today, but we don't know whether fighting will resume in Iran, but we doubt it. There are too many things at play. One is that the midterm elections are coming up. Two is that the price of oil cannot stay high. Three is that interest rates have to come down for mortgages. So there is a political shift that is taking place from the far right, to the middle, and also to the green economies. But you see, history tells us that Germany and France never have strong governments at the same time, all the way from the Napoleonic Wars to today. But for the first time, both of them are having weak governments. Okay, so again, if you are a correction will only take place in certain stocks, but not every stock. So it used to be selling may and go away, but the truth is that we expect certain things. So discount that slide. Now, one other thing that is important is that the level of there's growth, there's level of activity, and there are other things that happen. So as far as the economy is concerned, the growth is still, we don't have growth numbers yet. We have fiscal numbers. We know that debt is increasing. We know that tax collection is increasing. We know that some sectors are growing while some sectors are flatlining. So if you look up here, activity levels will show that your PMI, which captures the level of activity, after about quite a few number of months, they are now beginning to decline or shrink. Global GDP growth, as you can see, has gone from 3.1 all the way to 2.6. And so this is what you are seeing. The inflationary trend, I think when you look at the inflation trend, it's good to look at it in the context of your interest rates and whether there's any the reality of what happened at the NPC meeting. Okay, so again, the saying there is the cleanest of the dirty shirts. That's political spending, is that. So that's a normal saying. So we're going to have, we're looking at for the next 4 weeks or so, we should see, technically speaking, we should see some exchange rate stability. We should see a lot of interest in the Dangote refinery. We should see Dangote bring down PMS and diesel price and jet fuel, and that any drop in the price would at least to stop transport fares from increasing. But we think that it's only when the price of PMS drops below 1,200 or 1,100 that you may begin to see transport fares decline. Right now, the guys who are the transporters are making money, just like if you look at the inflation basket, you'll find that the price of flour has gone down from 64 to 54,000, but the price of bread has stayed static. So prices are normally sticky downwards. So we look at inflation, and depending on how you look at it, something is happening. Most of the commodities that are actually declining have import content. So if you import goods to depress prices, you're also automatically at the same time killing the local producers. So what will happen is that your prices will come down initially, your small businesses will go out, small and medium scale businesses will go out of business, your dollar reserves will drop, and then all of a sudden it will come back with a vengeance. So it's the solution to high inflation is not a permanent resort to imports, but a temporary resort, and then make sure that you increase your local productivity. So Dangote refinery, we have that, and we have that in the slides that we'll talk about. All right. So political spending, there will be election spending, and election spending is not like we know it. Before, there were parties contesting. Now everybody's in the same party. So election spending is going to be not as pervasive as it used to be. But again, since everybody is in the same party, I would say the cleanest of the dirty shirts, right? All politicians are wearing dirty shirts, and here you look for the cleanest one to take. So another way of saying the list of all evils. So now what next? Money supply growth is another issue. If you look at what has happened, since there was no adjustment to the asymmetric corridor, it means that banks and the standing facility remains that you can make 22% by leaving your money with the central bank. So what should you do? Buy treasury bills at 17, 18%, buy bonds of 17%, or put your money with the central bank and get 22% per annum. Makes sense to do that. So, and if that is the case, so the banks are taking your money, but What is 22% per annum to a bank? If you have taken money, you've taken a deposit of 100 naira, and the central bank has taken 45 naira of it as cash reserve. So you must get a return on the 55 that's equal to or higher than, so 22%, so you have to divide 22% by 2. Your effective return is 11%, right? So 11% rate of inflation is 15, 16%. So that is another issue. So putting your money with the banks could also have, but I'm saying this because our investors and people on this call are, are watching this very carefully. So now we are going to go to what happens next. Now, another very important thing in Nigeria we've seen is the exchange rate. And for some odd reason, there's the parallel market, there's the official market, there's the IATA rate of exchange market, there's the cash market, and there's the transfer market. All of these rates have converged, but are being held together. So where do we get the money to give you your dollars when you want it? We get it from oil, right? The price of oil is up, or we did a lot of forward commitments, so we're not getting that benefit today. 2, transfers from Nigerian diaspora and Nigerian creative sector. We get some transfers in. If Burna Boy goes and does a concert and comes back, or Davido does that, the money comes in. The banks have it and can sell it. We also have it from people, Nigerian investors abroad who are bringing money in. We also have foreign portfolio investors who are doing what they call a carry trade. They bring money in, invest, and as long as the exchange rate does not move more than the return they're getting, they're okay. But the hot money is money that comes in and goes out very quickly and can destabilize markets. So the central bank is keeping this, so that we must monitor the parallel rate and the difference between the two. You look at this, the rates have narrowed, and now you bring out your calculator and you ask yourself, the parallel market yesterday was 1395 or 1400. That was after the central bank made an announcement. No surprises. The official market was 1371, which means that you still have to go and give your mother's birth certificate to the bank to do the transfer. But if I go to the parallel market, no questions asked. Then there's the PPP, which is just a simple arithmetical average of this basket, crude basket. It gives us 1193. Then we have another measure of calculation, which we take our total money supply, which is 123 trillion, and divide that by our external reserves and total exports. And it gives us 1194. I don't know, it's coincidence? Yes, maybe bingo, I don't know. But it's just 1 naira difference between the PPP value and that value. So again, we look at that. But there are fundamentals that drive a currency. The fundamentals show that the currency, our terms of trade are improving. That's to compare our export prices to our import prices. Our gross external reserves are not looking bad, $49 billion. Oil price average 105, but don't forget we sold a lot of forward commitments. Banking recapitalization is successful, and the banks are not, many of them are not able to declare dividends. S&P upgrade of sovereign rating, don't be deceived. And, yes, we are doing well, we've done better, but we are still a junk investment. There are only 3 countries which are investment grade in Africa, I think: Mauritius, Botswana, and Morocco. All the others are junk. Okay, revenue up, fiscal spending higher. I've said this already. And you can see that the debt is increasing while your debt is increasing at a rate faster than your revenue. I think that's 2.2 trillion naira of the domestic revenue, and while 2.4 trillion naira of debt. So, but again, what are you doing with the debt? That's the question. So we'll come back and ask ourselves at the end of this period that what should I be buying based on what we know? What will happen? So oil production has increased. Government is going to, so if government gets more revenue, government pays contractors. So if you're buying construction companies, you're buying into real estate, that tells you something, right? And are buying the telcos and buying the fintechs, that tells you something as well. So post-MPC analysis, we've already gone through this. What has happened? They left all parameters unchanged, so no change. In the last 3 months, 10 central banks have tracked, 8 maintain status quo and 2 cut rates. So Nigeria is not an outlier. That's what we discussed yesterday. This slide you already saw earlier on about market expected no changes and Naira stable. Now, on the markets, we think that equities, you've got to be very discerning about the equities you buy. One, the product that this company is providing, either in service or commodity, must be as price inelastic as possible, right? Two, the player must be a leading player, a dominant player, which means that he makes more money as scale increases. Three is that the company or that business must have some African intent. Even if you are not producing in other African countries, you must produce things that other people will buy from here and take across the border. So you've got to bear that. So treasury bills, I'm not sure that the Central Bank of Nigeria or the debt management office, the amount of bills being issued, right? We've got to monitor that, but the treasury bill rates are not going to fall much lower than the rate of inflation. So there's some kind of parity there. So if you have a portfolio and it's a mixed portfolio, you have some treasury bills, some bonds, some commercial papers, and some equities. So you have a balanced portfolio. But all of this depends on the fact that we think that there'll be political stability. Major developments to watch out for there are many things, including there's a public holiday coming, there's French Open tennis, OPEC will meet, FIFA World Cup will start, Federal Reserve, and what we do not know is what's going on in the minds of the US president. But I think he's becoming more predictable. So we have the predictables versus the imponderables. The Bank of England meeting, we don't expect any surprise, but Federal Reserve, I don't think they're going to increase, so everything. We have elections in Ekiti State. So what do we do? So you must watch the meetings that are taking place. So the US and China, between two of them, they control their total GDP is more than the rest of the world put together. The rest of the world is 49 trillion, whilst China and the US control 50 trillion. So it's balanced. But the interesting thing that China has moved is, if you look at China, if you take a snapshot, you'll be deceiving yourself. The Chinese economy was almost 14, 15 trillion dollars about 5, 10 years ago. But the average rate of growth of the Chinese economy has gone down from 7, 8% to about 5%, while the average rate of growth in the US has actually been lower than that. So China is catching up, and China is becoming a dominant player. Everybody wants the Chinese. In Africa, the Chinese have the Road and Belt Initiative. But let's look at what has happened lately. The Chinese companies have acquired Lafarge, right? And that's a major in the cement space. We have the Chinese also investing in power, right? We have them investing in rail, and as a matter of fact, I think they got a contract to rebuild Tata Bridge. So they are around. So they are the new bride, and they are not being carried away. And if you look at what they have the biggest share of electric vehicles in the world. They have intellectual property. They are investing quite heavily in e-commerce, and also the chip business is also What are they doing here? The Chinese-backed project in Nigeria, the Lekki Deep Sea Port. China-Nigerian trade is over $22 to $23 billion. And that is formal trade. The informal trade, the number of people that smuggle themselves into China and come back. But again, the Chinese are they're intolerant of bad behavior. So if Nigerians want to go into China to do some strange things, they end up being executed, right? So one would say that we invest in things that are normal here. So China-Africa trade is about 348 billion. Ours is only 22 billion, less than 4 or 5%. So if Nigerian economy is the second largest economy in sub-Saharan Africa, and yet we have only 2% of Chinese trade in Africa, it means that we have become relatively irrelevant in the scheme of things. Okay, so Kevin Walsh comes in, and he has one vote. He's not going to be able to change things, but again, it is 6 months to elections, and everything is at play. So we don't know what's going to happen, but again, he has some money of his own, but it's unlikely. Kevin Walsh was not Donald Trump's first choice. So it was, again, he had other ideas, but again, another example of the cleanness of the dirty shirts. All right, so one other development is OPEC. OPEC, 1970, had 70% of maybe 75% of global total output of oil. For 20 years or 30 years, by 2006, OPEC controlled 45%. And then we started having OPEC Plus on the Russians. Today, OPEC is down to 37%. And if you actually discount it properly, OPEC is probably about almost 25%. So from 70% to 25%, OPEC's control of price and output is getting weaker, the bargaining power of OPEC. But what has happened is that if you look at the OPEC producing countries, almost all of them, including Norway. Oh, Norway is not part of OPEC, but all of them have what we call the sovereign wealth funds. So if you look at this global equity markets, right, and you take that share of the global equity market that is controlled by the sovereign wealth funds, Kuwait, Bahrain, UAE, they have enough money for intergenerational wealth. In other words, that if they stop producing oil today, I'm not talking about Saudi Arabia, I'm talking about they can survive on their investment income. The entire country can survive their investment income for the next 40 years or 50 years. Okay, but there's a generation that builds wealth. There's a generation that accumulates and consolidates wealth. And then the third generation is the one that squanders it. So that's clearly what we say. So, but some people, when you have double promotion in class, if you are doing very well, there are some countries that will go from the creation of wealth to the squandering of wealth without consolidation. So those countries that are some oil producing countries are skipping the consolidation phase and going into the squandering phase. And you just pray that your country is not one of those. All right. So again, I look at countries and markets. Don't forget that there was the British Empire and the empire in which the sun never set, to now British Empire, which is become a very tiny empire. But again, Britain is now, if you look at the population mix, it used to be dominated by English speaking, then Europeans, after Brexit, then now immigrants, and it's also. So what's going to happen? I'm not going to even begin to forecast what's going to happen, but we have factored into our scenarios the fact that the price of oil will come down and that there'll be no escalation. the war cannot escalate more than this because Mr. Trump has found out that Venezuela is totally different from Iran, and that emotional response is different from rational responses. The Iranians, you found out now that the Iranians are not going anywhere, and the Chinese and Russians have an interest there. All right. So if you look at it, the total oil produced has not changed, but it is the choke point of how to transport it. So one hand, you have the production of oil. Two, you have the path where the oil goes to the rest of the world. And that alone has taken the price of oil from $60 to $100, which tells you that the oil markets are not that efficient. In other words, there is a lot of market manipulation depending on who controls what. The oil traders, the stock market players, the Wall Street traders, the hedge funds. So they all sit in the same room. They all went to the same school. And so they sit and manipulate. But the reality is that some economists say, and some econometricians say that $12 in 1993 is the same thing as $200 in 2026. So basically, this crisis has brought out the true price of oil. Okay, so conclusion, and it's very important that we take this. We think inflation will continue to trend upwards marginally. The same Brent is 98, but our own average is about 90, but it could come lower. I won't be surprised if tomorrow they tell us that Brent is 90 because something has happened. But I want you to bear one thing in mind, that there's oil production, there's strategic reserves, and then there's oil consumption. What has happened is that production has not changed. The strategic reserves is what we've been using, but the reserves have come down. And from the oil field to the strategic reserves, you have to go through the Strait of Hormuz, Suez Canal, and all. So that bottleneck has been challenged for the past 11 weeks. And if you look at the level of strategic reserves, it's probably usually about 12 to 18 weeks. So if you are looking at, I'm assuming that you are cooking and your gas provider has not come to it, and you are looking at your cooking gas, it's going down, it's going down. A point comes when you now have to go and buy cooking gas because your regulator is showing that. So that's the way you want to see it. Nigeria's oil production is about 1.45. We have our own issues here. Naira remains stable for now. We don't expect any dangerous move because the central bank seems to be, they know exactly what they're doing. The stock market is going to increase because of listing, not because of share price. So you've got to be very careful because some people will sell what they have to buy Dangote listing, right? So those stocks that are being sold will decline in price, while the ones that are being bought. So this is not a ship, this is not a tide that will lift all boats. Remember what Warren Buffett said, it's only when the tide is out that we know those who are swimming naked, right? So Nigeria, Dangote refinery, according to yesterday, the whole of First Bank leadership team spent 8 hours at the Dangote refinery. And the chairman of First Bank said he personally was going to buy $100 million worth of Dangote shares, and he was asking for a preferential allotment. Well, let's see. So the refinery is already IPO is already oversubscribed. There'll be some road shows and all of that discussions taking place. So again, we all have to look at it closely and see. Bank recapitalization, stress test, the banking stocks. But we have something else happening with the fintechs, the OPays and the money points and others are also making the banking system and financial services much more efficient. But when we look at where other markets, fintechs, banks, markets, everybody makes money. It only means that those that were making a killing before are making normal and decent returns. And so everybody wins. It's not a zero-sum game. Thank you very much.
Thank you so much, sir. Wow, this has been very interesting. Thank you so much. My name is Brimo. I happen to be the managing director of Alpha Morgan Bank. We're excited and very happy to see everybody in attendance. We're almost 600. That's interesting on this call. Thank you so much for attending. Our leader, our friend, our mentor, Mr. Bismarck has spoken, and I'm sure we've all taken our notes and start to take decisions. From us in the bank, we are happy to announce that the central bank recently, day before yesterday, approved our financials, the first one, and we are happy to announce.
Congratulations.
We broke even and we made money. We made almost about 2 billion PBT.
Wow.
And
Congratulations.
thank you so much. And just a 10-month operation. The balance sheet is growing, and out of our 14 approved branches, almost 10 is up and running. Our head count is growing very fast, and our system and structure stabilizing very fast. We want to thank everyone that has opened account and operating it, and we want to encourage everybody on this call to kindly go to the nearest bank, a branch, or online and open an account with us. We will continue to encourage you to patronize us while we provide total satisfying banking. I want to thank everybody for believing in us. I want to thank our speaker, and I want to use this opportunity to wish our Muslim brothers and sisters and attendees Baka Salah. We will see you again. While I hand over back to Doyin. The bank is growing and it's growing very fast. Very soon we'll call you to come and invest as an owner, but that will be after Dangote has finished his capitalization. Thank you so much, Oga. Thank you so much. Doyin, just go to your quick announcement.
Okay, thank you. Thank you, sir. Thank you once again for an insightful session, a lot to pick from. So let's begin with the questions. Baladi would like to ask, or would like to know, when should we expect inflation to ease to single digits? I don't even know how realistic that is, but let me ask the question. When should we expect to ease to single digits? And what's the implication to NPR and a bank interest margin? And related to that is a question, something that was running around in my head. Like, given this central bank, decisions, do you expect a prolonged period of higher for longer interest rates, or are we on track for steady easing? So those are two questions combined in one.
So you said when inflation is, the question I'd like to put to you is that when is it going to rain next, right? If you know when the next rain is going to fall, then I'll be able to tell you when inflation is going to ease. But having said that, the reality is that we are in a, what we call it, an ever-changing world, right? And so let's build that in. There's no hard and fast rule. We think that, remember what the central bank governor said yesterday, that it's going to be evidence-based, it's going to be data-driven. Just the same thing as the Federal Reserve Chairman in the US said, just the same thing as the Bank of England. So what we do, we always ask our investors and everybody to work on a scenario-based analysis. If this happens, this is what we will do. We do know that none of us last year, when we were talking about Dangote refinery, and none of us knew that there was going to be an attack in Iran. Well, none of us knew that aviation fuel was going to become 3,000 naira. So, there's divine intervention in markets as well. And Napoleon was the one that said that, give me smart generals, but also give me lucky generals. So if you can be lucky and smart. So we think that until November, after the midterm elections, when the discussion in the US will now go to who is going to take over, whether the Democrats are going to take over from Trump, or whether J.D. Vance or Marco Rubio or whoever, and so many things happen. They say 24 hours is a long time in politics, but the politics is going to drive the economic and market conditions after November, right? And for us, we will look inwards, and then we have to have a tidy. Nigeria will have to do a lot of work to make it a stable, reliable, and a country that can be more predictable than imponderable. That's what it is. So,
All right.
the question
Thank
is
you, sir.
we think that inflation will begin to decline towards the end of the year into next year. And at that point, the central bank begins to move. But typically, central banks do not change rates drastically in a run-up to an election, because if not, it will be considered as politically motivated. So we'll see, and it depends on how much the election spending. But don't forget, this is an election where almost everybody's in the same party, and so we don't know what's going to happen. But 24 hours is a long time in politics. I've refused to make any political projections until, they said the party never ends until the fat lady sings. Yeah.
Okay, thank you. As we know, I mean, you alluded to it, or you mentioned it in your presentation, the replacement of Jeremy Powell with Kevin Walsh.
Yes.
And people say Kevin Walsh is probably more stringent in his approach, but we're yet to see. There's a question here that asks, what can we expect as a result of the change in the Minister of Finance? A continuation, a new direction, or some amount of both?
No, are you talking about Kevin Walsh in the US or the Minister of Finance in Nigeria?
No, I'm merging the two. You know how you
Okay,
have a change?
there are two different things.
Yes.
Well, in all fairness, Nigeria's GDP is $256 billion. Global GDP is about $100 trillion. So Nigeria is about 0.25% of global economic activity. Nigeria can be closed down and written off, and the world will not even know what has happened. So I don't want us to equate the Nigerian importance of its officials with the US, right? But that is not to say we are not important, but we must know our mates, right? So we think that there'll be consistency. The Minister of Finance is a professional, and the whole thing is about there's revenue raising and there's efficient spending. And then there's efficient and optimal spending. So the revenue raising, we think, will continue aggressively. How the funds are utilized for productive and equitable means is another issue. I think we have a Minister of Finance who is going to be very professional about managing the spending process. The impact and the effectiveness of the spending, again, fiscal authorities spread across many ministries. But again, the federal government of Nigeria technically has about 52 to 54% of all the revenues in the country. The rest is in the states. So the Minister of Finance cannot tell the commissioner in one state what to do. It's a federal system. So for you to transform the spending mentality of Nigerians, you have to worry about the federal government, worry about the state governments, and worry about all the other things. Having said that, let's go back to Kevin Walsh. What you must know is that 65% of the total external reserves of all the countries in the world is in the US dollar. Number two, 85%, or roughly so, of all the transactions in the world on a daily basis is settled in US dollars. Right? Okay. Now, 25% of 27% of total GDP, 25% more than that, 30% of global GDP is from the US. So whether we like it or not, our reserves, we are lending money to America by keeping our external reserves. America does not keep reserves with you. You have to keep reserves because after the Second World War, we had the Bretton Woods. So we want to look at it for that. There's a need for stability, monetary stability, predictability in the US. we've had some disruptions, but it's a rule-based global economic order. Occasionally you have people come in, so we have the Trump era will soon come to an end. It comes to an end theoretically after the midterm elections, and then we are now running up to the next election. The Trump era begins to fade. So it goes from impactful to lame duck, then to become a dead duck, right? So we will now everybody be talking about who next amongst the Democrats, who next amongst the same thing is happening in France. The same thing is happening in Britain. The same thing is happening in Germany. So there's a shift, and some things are happening even in Russia. You know, we have the Russia-Ukraine war, we have the Gaza thing, we have the Iran US war. So, and Israel. We also have elections coming up in Israel in October. So for the first time, global economic activity and global political activity are there's a confluence of interests. So we cannot keep our eyes off that, but we shouldn't, you do not try to make political forecasts. All you can do is that we know the markets and we know the asset classes, and that you know that I think Elon Musk lost his case yesterday, but I understand that it is possible that is worth $800 billion from the new things that I'm hearing, that it may be worth $1 trillion. And that's huge. One man with $1 trillion of wealth is quite significant. And so, should we be buying Tesla? Should we be buying X? Should we be buying, when he bought, how many, I think he bought for $40 billion or so. That's what he bought X from when it was called Twitter. And now it's about 10 times more. So remember how many years ago NVIDIA started? Look at what's happening to Meta. So technology is driving the world. And I would advise that we should also look at technology. I've always been very hesitant about investing too much in technology. But the world, technology is driving everything. And I look at artificial intelligence, I look at power. One other thing we have to say here is that this market, this economy, and the global economy for that matter, is becoming more power dependent. And power has moved from just thermal power to renewable energy and all of that. So we should be looking for opportunities in how to get efficient power, right? And how to use redundant power. So I think when I look at the next 3-4 months, I'll be looking at what's happening to power, what's happening to the forbearance of power, what's happening to those who are investing in I know that the transmission companies are going to have to be privatized. I note with interest what's happening to Seplat and Aradel. Those are very interesting plays in petroleum, but petroleum is made up of crude petroleum and gas. Gas is being used for power. So that becomes an area that we have to look at 2-3 months from now, right? So when we have our next meeting, we'll be looking at what has happened to Seplat, what has happened to Aradel. And remember that some time ago, by this time last year, the oil marketing companies, Corn Oil, Total, and all these other guys, I want you to go and look at the difference in their performance. If you look at what has happened to Total compared to last year, this year, what has happened to Corn Oil compared to last year. And why? Because the price war between Dangote Refinery and the marketers has made some industries not as profitable as they used to be. So if you're holding those kind of equities, what are you going to do? Are they going to change? Are we going to see some improvement? So I think we should be looking at the power sector, taking another look at the crude oil upstream, right? Because you have Seplat and the Aradel, and then we should also look at more than anything else, look at the impact on the banking and the fintech system. Again, once again, congratulations for having your accounts approved. Congratulations for your growth. And again, keep up the good work.
Thank you so much, sir.
Thank you, sir. Thank you. Um, David had a question. The deadline for insurance companies' capitalization is in July. We are yet to see any significant movement in their stock prices. What are your thoughts around that in terms of investing in those stocks?
Normally, economics tells me that once you increase supply, price comes down. So if you are increasing capitalization, it means the available stocks in that sector have increased. Therefore, we could see stock price of insurance companies, but insurance is consolidating, right? The assets, as people expand their business and buy assets, those assets have to be insured. And if the banks are lending money, they will not lend you money if your assets are not insured. Because if I give you money to buy a truck and you don't insure it and the truck is stolen or crashes into the sea, there goes the truck, there goes the loan, and there goes the bank. So one of the conditions before that is that you must insure. So I think the insurance industry actually, there's a correlation between the growth of an economy and the growth of and in fact, the insurance industry actually grows faster than the banking industry in the world. But insurance risk is different from banking and credit risk. The probability of an unexpected event happening is called the actuarial sciences, which tell you, and they know how to compute that. And so you could, I have a friend before who had insured his car comprehensive for about 5-6 years. Nothing happened. The year that he decided to do third-party fire and theft was when the car crashed and he became a pedestrian, right? He would have, right? Also, the insurance read the thin lines. Remember that insurance does not cover. I have an old colleague who also went to spray his car and got the car all done up, and then the volcano or whatever it is, the panel beater and all of that came and said they would spray the car and make it nice. So they sprayed it and said it should dry up. And come and pick it up Monday. That on Sunday there was a massive storm and a tree fell on the car, and so he said, okay, go to insurance. Insurance said, no, act of God, right? So you're not covered by act of God. So and so again, so so three things are civil commotion, riots, and act of God. If your car is damaged in a riot, you are not, and you don't insure for riots, there's nothing. Insurance is about accidents. That wasn't an accident. That was a riot. So I'm saying this because I know a lot of people who have suffered, right? So, so the insurance industry is going to be growing, but please read those tiny lines. And if you build a house, please insure against floods, because that's again another act of God, right? So if you are renting a house also, people say don't rent houses in the dry season because you don't know what happens. It is when the rainy season, then you now know what kind of property you've rented. So again,
Right. Thank you.
Insurance is interesting. Yeah.
It is. Final question that we can take because we have overshot. And this is the question from Muni. And she says the Nigerian money market has remained relatively liquid despite, recent OMO auctions, as the CBN does not appear to be sterilizing liquidity as aggressively as it did before. And this is even with inflation, hitting 15.6. So is there a concern that sustained system liquidity at these levels could reaccelerate inflationary pressure? And what do you think is driving the CBN's current approach? Is the objective more towards supporting government's borrowing, easing funding, or stimulating growth?
No, the reality is that the CRR, this CRR is new. It was in those days, CRR used to be about 4 or 5%. You had banks, you had discount houses, and then you had other institutions. So normally, the banking system, through the discount window, you manage excess liquidity in the system. Then all of a sudden, all banks were licensed and everything. Now, what has happened is that when the CRR was introduced, technically speaking, the present governor used to be the chairman of Citibank, and Citibank is a rule-based institution. We sterilized, the central bank sterilized money and will not refund your money, right? Therefore, you found that effectively some of those banks, even though if I take a deposit of 100 naira today and central bank takes 55 naira away or 45 naira away, then I get another, and that deposit is repaid. They are supposed to give me back my 45 naira. They will take the 45% of the new deposits and will not refund the old one. So due to banks from the central bank was a high figure, what Cardoso did was to clean up this thing and say, okay, if you have money, if you're taking money from a bank, please refund it when, right? So that is why there's some form of excess liquidity. When there's excess liquidity, you either increase the CRR or you look for other instruments. But if you put those instruments in, right, well, you have open market operations, you have all sorts of things. So there's what we call high-powered money. High-powered money is money that has a dramatic effect on prices in the system. So you have money supply, you have high-powered money, and you have excess liquidity. All of these things are being managed at the same time. And that's why if you see what I showed you, when you take the total money supply of 123 trillion, divided by the external reserves and the exports, you will get a figure which gives you the exchange rate. It plays out in the exchange rate. So the central bank has done very well in being rules-based. Central bank has done very well. So it's now time to ensure the answer to this was the TSA. If all government institutions kept their money with the central bank under the TSA, liquidity would dry up in the banking system, right? But don't forget also, you are funded contractors. If the government gets its money from FAC and does not pay contractors, the money comes back. So there's your GDP, what we call the national income identity equation. There's also what we call the circular flow of income, where money goes from government to people, people spend to the private sector and comes back. So I don't want you to, the central bank is monitoring two things. One, price level. Two, the exchange rate. Then thirdly, they look at growth and unemployment. But the growth figures and the unemployment numbers today are not that, I can't say that they are very valid numbers. So with exchange rate we know, because there's a market there. Inflation we know, because we can carry out the survey. And also we know that things will get better. So as we try to end today, I think I would like to say that in the next 2 months, we should watch out for, I've said it again, the rotation of stocks and people selling to buy or keep money aside for the Dangote listing. Two, the price of oil, if things happen in Iran and all that. The integration between the Nigerian economy and the rest of the global economy is important, and that also the efficiency of the banking, fintech, telcos, and insurance businesses, all of those are part of the financial services. Thank God we have a very solid and autonomous central bank, so we should not expect any surprises. And they are open. I think from what we can see, they're doing all the right things at this point in time. Thank you.
Thank you so much. As always, it's always hard to go. It's almost like a relationship you don't want to end. But we thank you. I'm sorry, our participants, we can't take any more questions. We're way past time. So please welcome George Imade for the vote of thanks and closing remarks.
Thank you so much, Louis. Very awesome, as always, and we want to thank everyone that's found time to be here. The phenomenal growth in the attendance of this webinar shows the renewed confidence our participants have in this webinar. And, this is a school of a sort to be with Bismarck Rewane, our own very prof, who always give it out in details without reservation And by the time you leave here, you would have left with deep education around investment and finance. Thank you very much, sir, for doing this for us always. We appreciate you deeply. As always, we don't take it for granted. And we know you are our friends, and you always oblige us your presence. Thank you.
Pleasure is ours.
You pass, as always.
Okay.
To our audience, we are very grateful because you are not just attending, you are participating, you are engaging, your questions very torrent. If you see the number of questions, don't we just scratch the surface of it. A lot still left, but the education is in the presentation that you all have later, and you have opportunity to read more about it. We want to thank you for being here and making this program worthwhile, and for your time. We appreciate you. Thank you so much. And to the man behind the scene, Mr. Ade Raymond, the Managing Director of Afamorgan Bank. We want to thank you because you have kept faith with this program. You throw in every time all you have to ensure that this program holds, and you have not failed. It's a continued interest in this program. We are grateful to you for it, and we want to appreciate you, sir. And we know you continue to give to humanity, even through this program, and we rely on you to continue to provide this service. There are so many things we could not cover here, but the Afamorgan Group is well endowed with all the resources, the expertise, and everything you need to guide you through the investment climate. Come to Afamorgan Capital Managers Limited for the asset management business that you will need to do, where to put your money. You'll be well guided. Come to MBSL, which is Mystery Bank Security, our stockbroking arm of the business. You'll be told more of where to put the stock to pick. Some have just been picked here, very, very small, but we have the details to give to you. And when you come to the Afamorgan Bank, the result of our efforts has just been announced by the MD. Come, you will get the detail and the satisfying banking that you deserve. We are grateful to you for being part of this program for today, as we look forward to the next edition that is going to be more insightful, more educative, and more profound in terms of the knowledge that will come thereof. And that will be sometime in July, immediately after the MPC. That is what we do for humanity and for Nigerians. God bless every one of us for being part of it, as we look forward to the next edition of the program. On this note, we would like to draw the curtain and wish you the best, and wish you a happy Easter, a Salah celebration that comes up sometime next week, and we hope to see and celebrate more. God bless every one of us. Thank you.
Thank you.
Thank you. Bye-bye.
Bye-bye.
Bye.